Hello and welcome to this latest episode of the Energy Insiders podcast. My name is Giles Parkinson. I'm the editor-in-chief of Renew Economy and founder and editor of its EV-focused sister site, The Driven. And joining me, as usual, but from an entirely different place, he's David Leitch, ITK principal. David, I normally say I trust you are well, but I suspect you're not.
I'm joining from Siargao, an island off the coast of Philippines, famous for the Cloud9 surfing reef break. But I rush to assure everyone I won't be out on that break, but still it's a very nice touristy town. Let's not worry about that because we've got a long interview today with one of the most respected figures in the electricity industry from the point of view of listed companies, Frank Calabria, the CEO of Origin Energy and formerly CFO and also COO there, and he's been running the business for a long time. Origin's seen off 2 takeovers in the time I've been looking at the company, and in my opinion, well, let's hear what he has to say, shall we?
Well, we do, and I just wanted to preface this interview by pointing out that David was actually doing his share of the interview from the beach at, I can't remember which island now, doing a harbour cruise. So David's contribution is shorter than normal. And but that's okay. But the sound quality is pretty good. But no video from David, at least for that part, for those who are watching this on YouTube or whatever. But let's have a listen to Frank Calabria. Frank Calabria, welcome back to the Energy Insiders podcast.
Good to see you, Giles.
And David's on too, all the way from the Philippines. Look, so much to talk about, and we'll try and get to as many of these topics as possible. Battery investment, retail transition, just the whole sort of energy transition, government policy, and what have you. The big question always is, though, about the biggest thing of all, which is the Eraring coal generator. Now, you were last on here in early 2022, just after announcing the planned early closure of Eraring in August 2025.
Yeah.
Why hasn't it closed, and when will it close? Because it sounds like you might be dropping a few hints that it might not even completely shut down in 2027.
Yeah, so you're right. A fair bit's happened since we were last discussing all of this in terms of transition. And you're right, the notice for Eraring is in for August 27, and you asked a question about why not already, and I think the simple fact is that the replacement energy and capacity, if I could use that, has been slower. There's progress going on, Giles, but it hasn't exactly played out across the sector as we might have thought. And therefore, our notice has been really matched to try and fit with the timing of that transition. Our base case is 27. I've seen lots of comments, and you know. The reason we've, and that's our base case, but the reason why there's been, I suppose, speculation for many about whether it will be that date or not is there's just a lot going on coming into the system, and getting the exact timing of that from a reliability and security point of view is certainly not straightforward, and that's really what's happening. We're committed. We've got our climate transition action plan, and we're trying to just match that, and we're committed, as you know, to putting other energy and storage in, and you can see what we've done on storage, and we're doing a lot of work on Yanco Delta to get there.
Absolutely, and we'll get to that too. But so what you seem to be saying, though, is that there's a possibility that it might stay open beyond 2027, depending on the circumstances. You say there's a lot going on, but there's probably a lot not going on as well.
I think our plan and our notice into AEMO is 27. There's lots of scenarios that are out there, so yeah, but that's our base case at the moment.
When you were here on 2022, you said that the early closure of Eraring was because of a rapid influx of renewables, and you've said now that there wasn't enough coming in. Origin hasn't done much in terms of renewables. I mean, I know you're going to talk about Yanco Delta and some of the other projects in the pipeline, but you haven't actually sort of built any since that date. And we've talked about this on this podcast and on the Renew Economy website. I mean, is it fair to sort of blame you guys for not building any capacity? Were you relying on the rest of the market building capacity? Is it fair to? I'm just wondering how you can respond to that, because we've talked about effectively a buyer's strike, I think, by the big retailers, and I think that's frustrated many people in the energy industry. So maybe you can sort of address those concerns.
Yeah, no, I don't accept those comments in the sense that you think it's a strike of buyers by us. I mean, you're right. In the early days, there were lots of PPAs written under the Renewable Energy Target Scheme, and there were very clear obligations on retailers. And there's clearly been several attempts at reform, and therefore an understanding as the expiry of that scheme comes in, and we're currently under the mechanisms of the LTESA and the SIS, and a lot of people are actively bidding into the SIS, the Capacity Investment Scheme, for people who are not close to that. And we also, not to put a fine point on it, but just, we also were in the midst of a takeover bid, which also did, for an 18-month period, not make that straightforward. We made a commitment several years ago about 4 to 5 gigawatts, and that is several years ago, by 2030, and we're on track to achieve that. We've committed 1.7 gigawatts of storage, and we're in construction on that and writing offtake contracts. Writing PPAs for, when you think about what's really happening in the transition, there's a lot of solar coming on rooftop, and you can see that that's therefore, if you're looking at the transition, step back from it, you'd say, gee, what's actually happening in residences and businesses is that's exploding. Like, there's an enormous uptake of behind the meter assets and a whole bunch of on-site stuff and everything like that. And that spurred on really our priority for our capital has been really making sure that storage, because that variability's in. When it comes to the renewables, it comes down to wind in our mind, because there's a lot of solar, although you can see some hybrid projects now, but really it's been around wind. And we've committed ourselves, and a substantial amount has gone into Yanco Delta. But in terms of writing those PPAs, they have to be also at attractive prices as we manage that cost of energy. And that's actually been challenging. If you really wanted to really point to it, we feel we've got the most economic wind project in the market, but the costs of constructing those and the PPA prices people want for those is actually quite expensive right now in the system. And that's actually probably been a more recent phenomena, to be fair. You got several years, that's probably been a more recent phenomena. But certainly we looked at a lot of portfolios over time for those assets. We've got a number of other sites, but that's where our focus is right now.
Yeah, and I'm going to hand over to David after this question. You did very well, of course, with Stockyard Hill in Victoria. I think it must have been in the low 50s in the PPA megawatt hours, and you're probably lucky to get less than double that now. But just going back just to this really direct question, you announced in 2022 you're going to close Eraring. You have not managed for a whole bunch of different reasons to build any new large-scale wind or large-scale solar. Should you have done better?
I think if you had a look at where our priorities have been in terms of allocating and what's happened in the market, and also the transmission build-out, the emergence of RES, there's a lot of developers that have got assets for sale. They don't know whether they're going to get them developed today. I think in terms of making sure we are managing the risk, the timing of transition, the emergence of RES zones, we had to make a bet, and we therefore put ourselves in control of that by the biggest wind farm site now. There were definitely things that probably through the takeover bid, meant that we weren't making big bets on large acquisitions at that point in time, and that was as part of the scheme. But in terms of priority, I think we've got that about right. Everyone has got to actually be investing, but I'm not seeing renewables developers investing much either. So I think it's actually become way more challenging. I feel very confident about the fact that we've got the best wind site in there and the most economic. It's also a very large commitment. So I think that we've got the balance about right in terms of this transition. It is all happening, though, a little slower, and we're still waiting for transmission to be built out.
Frank, apologise for where I am. I wanted to say well done, I think, over 9 years as CEO of Origin. The balance sheet's improved out of sight, no doubt, due to APLNG coming on stream. EPS is much higher. The share price has more than doubled. It's pretty good. And yet the fundamental issue of still being like two companies to two groups of investors. I mean, APLNG's now a mature asset. Some of the fields are actually starting to decline a little bit, if I read correctly. Where do you see Origin in 9 years' time?
Yeah, good question. Good question. And David, you've been tracking the industry analytically as well before doing this for many years. And what you found is that we've been positioned across the value chain. I felt that that's the most appropriate way to position an industry that has some uncertainty on timing, but we can then talk about the direction of travel, because I think that's clear, despite the fact that there's been a debate around a variety of things at a sort of a policy and political level. The direction towards electrification is clear. But why we've actually been positioned across the two parts of the business is that they actually, therefore, value has shifted. And even if you looked at today, and back to Giles' earlier point, who would have thought that we would be at this position relative to several years ago, and what's that energy mix right now? And I think that's very much one of timing. If you played forward out over the next 9 years, I think there is a couple of key trends. Firstly, the belief that you will see a large shift towards customer, and you can see that right now, the electrification of transport, the home, the connectivity of devices, that distributed asset system, and I think we would be participating heavily in that, and our ambition would be that we would be electrifying 1 million homes between now and 2030. Secondly, you'll see the retirement of coal, and I can't give you the dates of everyone's assets, but we would have been out of coal and we would have been replacing that with a combination of storage and renewable. And because there's so much rooftop solar at the moment, although we assess it at the moment, our priority has been on large-scale storage and wind, and we see that trend continuing. And I think that we will see an organisation that's actually, it's obviously participating in technology through Kraken and also growth overseas through Octopus, but we would continue to see the opportunities that are emerging through those new technologies, but also the complete supply stack will shift. So I do see a very strong trend towards electrification. As it relates to the gas portfolio, it's been a fairly important ballast for us to be able to reinvest at a time in 2022 when we were speaking. The energy markets business was, I think, loss-making for a year, and that just demonstrates that there's been some, much less today, but there's been a fair bit of variability historically with the business, and that's enabled us to have the confidence to be able to not only pay a distribution to our shareholders, but to reinvest cash flows. So I don't know how to think about whether or not we would still have those two parts of the business, but where we are very much focused on is obviously that's generating very strong cash flows to enable us to invest in the transition and still pay those distributions.
Yeah, I think APLNG is basically paying the dividend when I look at his cash flow.
Yeah.
And obviously Octopus is valued very highly, but it's not really all that cash flow positive yet.
No,
and
it's growth.
It's a growth asset. And you mentioned just coming back to Yanco Delta, there's a lot of talk about the cost of wind development. Some people tell me that down in the southern area where you are, southeast, you can do it for, 3 million a megawatt, 3.5 million a megawatt. If I ignore what you actually paid for the asset to buy the rights for it, do you think that's a reasonable number?
I won't quote specific numbers. I will, though, directionally respond because we're in the midst of right now both turbine tenders and balance of plant, and we're really in the middle of that right now, David. I will say that it is a good wind resource. It's flat land, it's large scale, and so as a result, it does have the economies. And therefore, I'd say it right at the lowest end of the cost curve for wind, I have to say. But we are working it very hard and actively right now, and therefore.
And Frank, do you plan to keep it on the balance sheet, or the tradition in the past has been to develop it and then offload it? And you, related to that, you mentioned that there are a lot of assets for sale, and there certainly are. And as a listed company, you're the sort of vehicle that the superannuation industry could get behind if you've decided to make, to become bigger. You must have thought about a lot of these things. How do you think it'll all shake out?
Yeah, definitely. In the case of wind, David, our intent would be that we would go through the development phase and therefore write the offtake contract, and therefore and then move most of that off balance sheet, and therefore recycle the capital so we could develop that into other assets. And so that would be our intent over time with wind, and we have continued to look at both platforms, assets. We've got other assets in the New England zone. And we continue to actively look at that. But you're right, there are choices about us working with other developers, our own ability to develop those assets and also have more strategic relationships. And we continue to look at all of those things. It has been a sector that's actually moved quite a lot, as you probably appreciate, in terms of the quality of the assets, the premium paid for those platforms, and the opportunities and the timing they come to market. But we continue to look at that. But wind would be one where we would be actively involved in the development and then basically secure the energy for our portfolio and for our customers and then recycle that back. Where we have committed $1.7 billion in the last 2 years, and you think about choices for balance sheet, and back to Giles's point, that's a reasonable amount of capital to be investing. We had felt that the need for storage into the market based on the variability of energy was actually emerging much more rapidly, and that's where we chose to invest that. And whilst we've written a couple of offtake contracts in South Australia and Queensland, a large chunk of that is currently in the build phase, and that's where a lot of our choice has been to date. We have the choice once they're up and operational, and we're very close on the Raring one. Yeah, but we can choose that. But on wind, we would cycle capital over time. But we are making those choices, David, between that storage and other opportunities across the portfolio.
Yeah, because although you have the power to replace Eraring, you don't actually have the energy when I look at it, even when Yanco Delta is built. But we'll move on for that because no doubt, Origin sells about 30 terawatt hours. It must have a fair idea about where it's going to get it from in a few years' time. I just wanted to quickly ask before I duck out about the solar soaker. And I mean, it doesn't strike me. How do you think of that as policy and how it will impact Origin and Origin shareholders?
Yeah, well, we're waiting to see a little more detail on it. You'll know that there are a number of retailers in the market have a variety of products that are actually utilizing energy in the middle of the day, and therefore they've shaped that in a way that's obviously, particularly in certain markets, you can see there's been offers for various things about trying to utilize the abundance of that energy in the middle of the day, and we have products as well out there. But what's coming with this one now is that I think the uncertainty just associated with that is just how does it actually play out in terms of the cost recovery over that? How does it work with network charges? How does it work for the shoulder periods associated with that? But so I probably don't like the fact that you're sort of mandating a particular product. There are lots of products we're offering to actually utilize everyone's assets in the market and soaking up solar and charging vehicles and moving energy around. But I'm not against products that are actually trying to find a way in market that do that. There has been the emergence of that in the market. This just adds, it just comes down to the detail as to whether or not that's actually an appropriate incentive to do that. Remember, if it's actually that free in the middle of the day, we manage that as part of our portfolio and other, but as a small retailer, if there's volatility in the middle of the day, I'm not sure how that protects them. But, there's certain things we'd want to see in the design. But directionally, I'm okay with us, because this is where retailing's going, David. I mean, the fact is that whether you've got electric vehicles, you've got other assets behind the meter, the way your usage patterns, and whether you want to be an active participant or want someone to be able to help manage that for you and give you value that's fairly calculated and transparent, I actually think this is the direction of the market. I just don't think you need to embed that into the tariff mechanism. I think it's better that we are offering those products as retailers across the market. It's certainly the trend that's going, and you can see the emergence of that.
Yeah. And my final question then, kind of related to that, is to virtual power plants. I mean, Origin had a large virtual power plant at the time of the Brookfield takeover, but I don't think it was said not to be profitable in the Grant Samuel report at the time. I just wondered broadly how it's progressed, in the year or two since then, and how you see it going forward, and broadly how you're going to interact with the customer.
Yeah, sure. Great question. People don't actually buy virtual power plants, but virtual power plants help the benefit to be shared between customers and ourselves by matching supply and demand in real time. We have something between 300 and 400, nearly 400,000 assets, connected, or devices and assets connected. We've got about 1.5, 1.6 gigawatts. Grown rapidly, certainly integrated into our book, creating value, and now it is creating value, and the products are really now flowing through to customers. So you'll see a whole bunch of battery products now, and a whole range of those things that are now being implemented to the market. Some of the product development, from our perspective, took a little longer while we were implementing Kraken, but we certainly are very confident that it's value creating for us and the customers. What we saw early on, David, was, there was a whole bunch of latent assets in the market, which we then grew rapidly. And now that virtual power plant will grow, and we're talking about residents here. There's obviously large scale assets, but the residential assets will grow over time with the uptake, particularly of EVs, and more batteries in the market. But as I said at the beginning, customers don't buy a VPP, but they certainly want the benefits. And our ability is therefore, how do you share those benefits where people that want to be proactive in the market can get the benefit of that, and others that want that to be managed for them also can get the benefits associated with it. So I'd expect that to continue to grow, and the contribution to both Origin, but also the benefit of the customers to continue to grow. I think it is emerging now. I think if you actually looked at the transition, and whilst we talked about the build out of renewables, although storage has really grown in a large scale, if you really look at what's happened over the last 6 to 12 months, 6 months in particular, it's in fact just like you would have saw, and we would have talked historically about the rapid growth and technology costs reducing for rooftop solar. We're seeing that repeat right now in the storage space behind the meter, and that's going to drive an enormous amount of innovation, in my view, and it's going to drive an enormous amount of participation in the market. And certainly trust and those aspects become absolutely vital as you move more away from a commodity-based market.
That sort of sparks two questions from me. And the first one, just pick up on that matter of trust, because there's been a fair bit of discussion about VPPs and whether sort of customers trust the retailer, et cetera, et cetera. What have you seen out there in that, and what have you done to try and overcome that?
Well, I think trust starts firstly at the very basic thing is about getting your service experience right, and, getting those things right every day. And whether you're a vulnerable customer all the way through to a proactive customer, that you're actually doing what you say you'll do. So I think there's a fundamental piece about that. And then there's fairness, equity, loyalty, and a whole bunch of those things that I think go to the heart of trust. But to your point going forward, if you're thinking about the adoption and what we're doing about new products and the sharing of the benefits of those, whilst it's early months, we see a really large range of products now that are in the battery space. We see a lot of adoption of new products, and we see a lot emerging right now in EV. There's a lot of trials going on. There's a lot of adoption of that going on. So I'm highly confident that there's more and more of that emerging to be available for customers. But I do find one of the things about trust is all about, you actually behaving as a retailer that actually provides what customers are after. And not everyone wants the same, but the fact is that you're there to do what you say you'll do, and that you'll emerge from that. I saw some commentary about this. I just feel that what's happening right now is you're going to find it very dynamic in the market in terms of products and offerings, but ultimately you've got to get that core proposition and service experience to be first class all the time.
Yeah. And just going back to one of David's point about what the business looks like in 10 years' time. I mean, you're the biggest retailer. I mean, obviously you've got this LNG business, you've got the huge generation and growing storage business. What does the retail market look like? Because that's going to change, as you've just mentioned, just so fundamentally.
It will be very dramatic, as you probably appreciate. You've got a lot of energy then produced behind the meter, a lot more will be stored behind the meter, and you'll have a lot of other customers who can't participate in that, and so therefore they'll need different product offerings. I do genuinely believe that you'll see a growth in, electrification more broadly, and I think just people's participation in the market will become far more pervasive over time. And I think therefore how you share the benefits with customers and manage that, it's far more interactive, and it's far more knowledgeable as a customer base coming at us. So I think it's just, it's going to be dramatically different. I'm quite excited about what emerges for the market over time. If I thought about, we all talk about a transition, but I just think we're going to see an expansion of electrification. And you can just see, even though you've got a whole bunch of policy stuff we talk about regarding large scale development of renewables and building infrastructure and the time it takes, and then the connectivity of it and the cost of that, have made those all challenging. If you'd have even played forward what you'd seen 12 months ago and now look back, you'd say, gee, there's a dramatic shift on, and I'm just very excited by it. And it's up to us to be able to respond well to that market for lots of different customers.
Well, we asked this question when we had AGL CEO Damien Nix on a couple of months ago, but we only asked it after the recording stops. I'm going to ask you now. I'm going to remember. How are you going in your own electrification? Do you live in a fully electrified home?
I don't live in a fully electrified home, although I'm because I still have gas appliances in the cooking appliances there. We have electric vehicles though, and in fact we're doing some renovation work right now, and so that will be a catalyst for us to electrify more of our home right now. So yeah, we certainly, I think, like many customers, we've got solar and all those things as well. So there's a lot going on, and it's changed. I just think about the choices we're making; they're fundamentally changing every day. So definitely much more electrified, but there's more.
Yeah, Damien actually commented about how challenging it was doing this electrification journey. I'm just wondering if you're getting the appropriate help from your retailer.
When I say challenge, well, it's interesting you talk about the challenges. I think developing assets and building assets, and that's been well documented, like about that, and how do we have enduring settings over time, and how do we make sure we get the right form of large-scale generation with the right amount of backup and the utilization of storage assets. And you can see when those trigger points are there, you can just see just how much has been invested. Like we've invested enormously in that storage assets. It's obviously been more challenging with wind more broadly there now.
Yeah, can I just come back to the wind for a second? Because Yanco Delta is unlikely to be online before about 2029 or 2030, the way things go. Hasn't even got to notice to proceed yet. But you would obviously still hope, officially at least right now, Eraring closes 2027. I mean, are you going to be, another thing we asked Damien about is, should we be hopeful about Origin actually signing more PPAs or somehow facilitating more wind to be developed in advance of Yanco Delta or at the same time?
Yeah, and there's both things about sourcing existing energy and that's available in the market, whether that be from existing assets or new assets. The cost of developing the wind assets that we can see that are out there when we are actively out there looking at a lot of PPAs, we can't see that being cost competitive now relative to the Yanco Delta project. I think there's that's certainly, even since a lot of developers have signed up to some of the schemes and so forth, I think that's become more challenging. So we are actively out there, David. You should be rest assured on looking at all of those forms of energy coming into the market, and we would make sure we contract. We're not shy to contract assets, and we have done that historically. That has become a lot more challenging based on the price point for that coming into the market. But, we are playing forward now. We know that we will be retiring our coal assets, and we're talking about dates within a particular window. But we also have to make sure we bring that energy in the most cost effective. And when we look at Yanco Delta and that in the wind space, it looks to be the most cost effective for us. So that's been our focus. As to the timing of that versus Eraring and the other choices of contracting, you should be thinking that we're in the market also looking at those contracting choices.
Did you see any sign that wind costs are topping out?
I'm not across the whole sector. I haven't seen that to date. Data's highlighted that the Southwest Res, relative to some of the other topography and logistics and scale, that's been a benefit. It's obviously made it a very big investment, because even if it's 1.5 gigs and at David's numbers, it's well over 4 billion, so it's a big number. But we're certainly, I think everyone responds in that environment, and we're seeing that through both turbine contractors, suppliers, and also balance of plant, that everyone wants to get these developed. People are not trying to develop it, so we're actually driving that, and I think we'll find productivity improvements. But I think it's premature to say that that's come off more broadly. But I haven't seen that escalating beyond, but it's still at a higher point than we would have thought a few years ago.
And what about battery storage? You're doing a lot in batteries. You've got the Eraring battery, 700 megawatts, 2,800 megawatt hours, will be the biggest until probably overtaken by Supernode. And you've contracted a whole batch of Supernode.
That's exactly right.
And you're building Mortlake. And you think you're looking at a whole bunch of other ones as well. Perhaps you can expand on that. And I've got two questions. One, what's happening with battery storage costs? Because we're hearing that they are falling and possibly still falling, but maybe they're not. And two, what are you going to be using these batteries for?
Yeah, sure. So you're absolutely right. We're very the costs of the battery we're seeing certainly continue to fall. We've certainly seen that, and you can see that right now. I mean, at a very simplified example, but if you're even participating in the rebate program as a consumer, what you'd find is what you thought you could get for that rebate and what scale of battery you could get now for that rebate is certainly much higher. So we're certainly seeing the economies of that and certainly the benefits of the reduction in that cost curve for that technology. That's made us very constructive to it, although you do need to be mindful if you're building all of them at the one point in time and contracting that you don't get caught. And therefore, we've thought about the amount of batteries we're bringing in, and we're pretty confident that we've got that at a good price point. We see with so much, and by the way, I should just, as a status update, we've got Eraring 1 and 3, and they're really going right through their whole point testing right now. And so we've got a lot, we're getting right to the pointy end of that, and that's going well. But, you want to make sure you get through all your commissioning, as you can see.
How are your transformers?
Yeah, that's exactly right. So we want to make sure, and everything's going well so far. And, we did guide to the market that we would expect those to be operating by, January 26, and we're tracking towards that, but we're right in those final stages. That's gone very well, and we've been able to. And as time's gone through those projects, probably saw that as that cost curve fell, that what was originally 2-hour batteries are now moving to 4 hours, and in some cases they're moving even beyond 4 hours. But our average would be 4 hours on those Eraring, and we've seen the real economics of batteries move to be longer in duration, and as you know, the revenue streams alter slightly as you go over time in duration. And when you really think about why they're coming in, it's that there's really twofold. There's so much rooftop solar and so much solar in the middle of the day today that you could observe those electricity prices. There's that famous duck curve is in play every single day, and there's just an enormous benefit to be able to move that energy into the evening peaks, which are actually rising to be much more substantially higher. And so there's a lot to be done. There's stability of grid. There's also the way it works in the portfolio. You'll be familiar, but maybe many listeners not. We start gas-fired plants very, very regularly, far more frequently than anyone ever thought because of either evening peaks or unreliability of coal. You bring a lot of batteries in, and clearly there's a lot of short-term needs but don't need to be started for periods of time, and we can just see it works very, very well because of its rapid start and its ability to serve a role on the market. So we think it has a lot of portfolio benefits to then how do you run your assets over time. So we're certainly very, very constructive towards it. We think the technology's moved very rapidly. And, when you're thinking about making bets, in addition to the contracts, we've made a $1.7 billion bet on those batteries in each of the states. That tells you we think that they're playing a vital role. The other thing, too, is as coal ages, and we've mentioned this before, a lot of there's, these units, we're very proud of the way Eraring operates and its reliability, but we've got to make sure, if there's unreliability, you want assets that can actually back up and play a role. Now, batteries can only do that for several hours, but when you've got peak times, it does play a contribution, but so do gas peakers as well.
Have batteries sort of killed the market for gas peakers, though? I mean, even though gas peakers can do things that they probably last longer than most batteries, but gas peakers, they're going up in price. We just saw AEMO in the last week sort of talk about the problems with gas peakers in the sense of just I think it was the AMC, wasn't it? Talking about sort of changing the reliability rules because of the extra costs of gas peakers and the inability of actually getting hold of the turbines.
Well, what's actually happened, it's an extraordinary 3 or 4 years ago, or going to be roughly 2 or 3 years ago, you could have ordered a turbine and had that arrive within a year or within months, Now the order books are so strong for gas turbines that they're now out several years. And therefore, it's really gone from an industry that was not seeing any demand to seeing an enormous amount of demand, and there'll be different markets with that demand over there, but that's what's made it very competitive and therefore the lead times to bring them in. I mean, the key role that gas peakers play, and you can see the changing dynamic over time, is batteries are going to play a role that move energy around in the day, and they may well, increase in their duration over time. They've gone from 2 hours to 4 hours. In some cases, they might move to 6 hours, and maybe that continues. But what we have is a real need as you take coal out of the system for a couple of reasons, is that you may well over time, and I think this is very much going to progress over time, because I think you would still be running peakers for those extended periods because the battery's really at that short duration. But if you think about over time, they might well be sitting at very low capacity factors and in reserve, but you could end up, as we've seen over recent years, in late May or early June, where there might be still overcast days and there's not enough coal running, where gas has to run for a period of time. So the reason why you've seen the narrative around gas and the certainly understanding of it is they, over time, may run at lower capacity factors, will play a vital role as backup capacity in the market, and that enables you to utilise high penetration of renewables and storage for a long period of time, which then contributes to the decarbonisation, but the ability to make sure you've got power for all occasions. But you're right, the time frames to develop those assets now are challenged by the supply chain in terms of turbines. So we do have to think about that in the context of the transition, not just away from coal, but making sure you've got the right assets in there. And you can see AEMO saying we need, I think the last time, their last report said you needed 15 gigawatts of gas over time. They didn't say what capacity factor it's running at, but they said you're going to need this in the system as you retire coal. And so I still think it's got a vital role to play, but it just may not be predictably high output over the longer period of time.
Yeah, no, I think it's going to be quite low output, and there's probably 11 gigawatts there, but some of it's going to retire, and they probably need to sort of...
Some of that will replace as well over time. You're absolutely
yeah. Let's get on to policy. Talking about those calm winter days. I think Tim Nelson was talking about the Kälteflaut, not so much the Dunkelflaut, but the Kälteflaut, which is on those sort of cold, calm days in the middle of winter, and that's when you kind of need that capacity. Yeah. So what are you hoping to see from the Nelson Review? I mean, I guess we're all going to find out in 2 weeks' time, but what was on your, if you're Santa Claus or if you're just Tim Norton?
Well, I think, look, and to be really clear, I think Tim and his team have done a fantastic job engaging with industry and jurisdictions, and kept everyone in the loop, and thought about the existing market settings and how they need to evolve over time. I think they've been very clear that there needs to be both short-term, medium-term, and sort of longer-term, solutions there. I think the critical one from our perspective, there's a lot of, there's a lot that sits in there about the various services, but the critical one from our perspective is the ESEM body that's set up to actually match the duration risk, because you talked about earlier that you've got a lot of existing customers that contract, 1 to 3 years, maybe a little bit more, and yet investment signals require, these are long dated assets, so therefore there's this sort of tenor gap they talk about. And he certainly thought about contract structures and the mechanism and the body that's involved in setting that up, so that there is in fact a contract and liquidity of contracts that address that tenor gap to encourage investment. That's that in my mind is the key mechanism that needs to drive on an enduring basis that investment over time. Current government schemes are in place, there's no doubt about that, but I think the recognition that the government's appointed Tim to think about that market design is a sort of thing, recognition that we're going to be investing in a whole bunch of new sets of services for the sector. And I think that one becomes absolutely key in terms of getting it right, so that we all know that we have an enduring mechanism that underpins the investment in the new technologies that are required. And as you say, they'll all play slightly different roles. A gas plant will play a different role to wind investment, solar storage going forward, as for example. So that's key. There's a bunch of other stuff that's in there about market making obligations, the types of contracts that are in place. But I think really landing that supported in principle by the jurisdictions and the industry is very important. Then there's a critical period post-Christmas that would go back into the department to then design the detail associated with that, what I would call that mechanism to make sure those contracts are there, stimulating investment.
And presumably we get what we're kind of expecting from that. Is that going to be enough to complete this energy transition in the time by 2035? Do we need something else?
No, well, I think the the expectation and the reason that work's been done is that you don't need to have other mechanisms in place. Now, that doesn't mean that, I don't know whether states will feel they need to complement that or not, but if you had everyone buying into that mechanism, then I think recognizing the various services that once upon a time became inherent in the types of assets that were historically built, but now are separately needed to be built. And what I see is, you've got things like synchronous condensers coming in now to keep the system steady and a whole bunch of things. So I think there's a whole range of services. I do think that it's been thought through as the solution for the market on an enduring basis, and certainly that's how we've been viewing it. So it looks good.
Yeah. And you've said previously, I mean, I think most heads of most big gentailers talk about this because they're closing down their coal-fired generators and they're kind of replacing the system. And the days of old baseload, always on power systems are pretty much behind us now. I mean, there's obviously some there. Can you just sort of explain a bit more about that? Because, people hear a lot from me, but I think it's better if they hear it from people like you.
Yeah, no, that's true. You're right. So when the market was originally designed and what was existing there is you essentially came from Australia, that in Australia we had a large coal resource base, a lot of base load coal in the system, and therefore it was running at very high capacity factors, providing nearly all of the power. And then really it was only supplemented well before the new technologies by gas peakers that literally ran in peak time, but largely on a summer day when air conditioning load was up or where there might have been an unreliability of a coal event. Clearly what's happened as the coal retires, and they are getting later and later in their age, and Eraring is well over 40 years now, so they're getting, as they retire, the cheapest new form build of energy coming in has been in the form of solar and wind, but they run at lower capacity factors under different weather conditions, and clearly in the case of solar, not overnight. And so as a result of them coming in, what you've got to then provide services for energy. You've got to have energy that's produced overnight, or you've got to have storage mechanisms that can be overnight. And then you have different weather conditions, so you've got the ability to respond. And when you get to beyond moving energy around for several hours, you are in the realms of energy sources that can be started up and operated on demand. And so therefore, that's historically really been the realm of hydro, pumped hydro, and also gas-fired generation. And that's why we think gas-fired generation is why the market operator thinks it's still going to play a role. But as you bring more and more renewables into the system and there's greater diversification, there's more and more storage, and that goes to longer storage, then clearly that will change the pattern of how you're operating over time. So therefore, the services that are provided by the various assets, like keeping the grid stable, a lot of technologies emerging in all of those, but they do need to be supplemented by the way those are designed and also complemented across the suite of technologies. And so therefore, getting the right forms of those technologies to come together as a combination efficiently is the game today. And that's emerging. And I think the key thing that what we're seeing too right now is that just the amount that's also now happening in people's behind the meter with people's homes, where they've got their own solar, got their own storage, now have an electric vehicle. Will that electric vehicle go back to the grid? Can the grid cope with that? How does that work in terms of the congestion in distribution networks? That's a whole other puzzle, but that's also adding to the demand and supply mix, and that's what we're actively managing, which is why we talked about the customer relationship changing as well.
Yeah. Is it disappointing and frustrating that one of the major parties of the coalition hasn't seemed to have got the memo on that energy transition? They've also sort of torn up their commitment to net zero. I mean, they might one day be back in government.
They might one day be back in government, you're right. And look, there's been a debate in Australia. Probably my main thing is that we really are investing in long-dated assets, and we need to make long-term commitments, and therefore the benefit of us having mechanisms that we can rely upon rather than the change emerging is in fact important to us, because it gives the confidence that when you go and invest in a gas plant, it's 20-something years. When you go invest in a storage asset, you're making a bet for the next 10 to 15 years. So what you're seeking for is not the fact that technology won't change and markets won't evolve, but what you want to make sure is that you don't feel the rules will change overnight. And look, while that debate's out there, that risk remains. I do feel that you've got the states playing a key role in that right now to try and make sure they get the security supply for their own jurisdictions. I feel that there is still a debate about that, and that seems to me to be a debate about how quickly we should be going on the decarbonisation path. And I mean, there are views. There will be a variety of views held in society, and that's what elected governments are representing, those views. We find that, we really will need to make sure that we're retiring coal as they get to their end of life, and we need to make the best decision to replace that. And today, the technologies are clear about what are coming in. That could change over time, but at the moment, we don't have the choice to wait for all of that to occur, and therefore we want to continue to get on with it. But, I'm not going to comment on various different political views. The main thing for us is that this is an industry that's got to make long-term decisions, and we need to do that for the affordability of customers, not just the planet as well. So that is all better for all customers if we do that in an orderly, predictable way.
And higher risk, I guess, means higher interest and financing costs.
Look, I think then you'd go to the funders to tell you about what do they think is associated with the risk of building those assets and how do they think about it. There's a whole range of risks that go to all different assets, but you're right. If risk is there, then that will be priced in by financiers.
Okay, just two final questions. One's from a reader or a listener. I was walking on the beach this morning and he said, I said, I'm interviewing Frank Calabria from Origin Energy this afternoon. He goes, oh, terrific. Ask him when the bill's coming down.
Yeah, that's right. Okay, well, I can tell you that is always a very tricky question, but I'm very happy to just give you a bit of insight as to what's going on. I think if I was looking at, we've still got a lot of infrastructure being built into the system. So there's a natural upward pressure as you bring more and more transmission and distribution coming into the system. I think that as more supply comes in over time, you're going to see the benefits of that supply come in. But at the moment, we've got quite a bit of investment going into the system at the moment. So I wouldn't be predicting them coming down necessarily, easily at the moment. I will say that the wholesale cost of energy is better this year than last year. So that's a good forward signal, but it's only one component of the bill.
Yeah. And the last one's a bit of a philosophical one, and I kind of wrote it out to myself because I've been wondering about it. The question is basically, if Origin was privately owned, government owned, or even a not-for-profit, would the coal-fired power station have already closed by now? And I ask this because directors and management clearly have a fiduciary duty to shareholders. I mean, I guess myself, we've got responsibilities for the grid, and those shareholders want the best returns they get. And I guess it just comes to the fact, what extent does the profit motive of a publicly listed company get in the way of an energy transition that science and the community demands? And, it's a philosophical one, not one that you can easily resolve right now.
No, but I think firstly, philosophically, there's no doubt that one of our key stakeholders is our shareholders, but we do also have customers and communities and our employees as well that are other stakeholders. And if you get those too far out of balance, then that's not good for shareholders as well. So I think, and we're talking philosophically, you've got to be really careful that you don't get those quite rapidly out of balance. If you were talking to governments today, for example, in New South Wales government that we've had a very good relationship with about can you shut Eraring today, or if you talk to the market operator, could you shut Eraring literally today? They would both say, oh, there's a lot that's still got to come into the system. So I don't think anyone's debating about not standing there and saying we've got to make sure we've got a reliable system that's there. We also see the march on. There's a lot more coming into the system, so that's not a static equation. So we certainly will feel that you've only got to run these plants for as long as that's necessary in the market based on the demand for electricity. And so therefore, there will be a time where you have to shift away from that. And that is also got considerations around climate transition action plan that we've got and commitments we've got to make to that. So I feel that right now you would not make a different decision if you were a not-for-profit or a government entity or private. Now, that's also very different, though, to what people were predicting 2 or 3 years ago, Giles, and we could have had quite a different conversation. Now, there's a whole range of inputs into that decision, but I don't believe the community would debate that today. What I find more difficult to do to tell you is exactly when does that point shift. But do I know it is? Yes. And do I know that's going to happen over the coming years? Absolutely. And do I therefore think of we managing that appropriately? I think our teams are, and we're keeping it reliable as we do. The plant to run and effective. But it is an important consideration because right now we've got a lot of customers that also very much focus on affordability as well as they expect us to decarbonise, and getting the balancing act for all of those whilst also a market operator saying just make sure this grid stays stable as well are quite tricky balancing acts between stakeholders. But I do think there's a lot of goodwill by market operators, industry and governments that are actively talking about it. And what I would feel today, even a lot more than several years ago, the knowledge, the understanding, and the good intent to get that right is consistent across. And so I do feel people are not acting willfully one way or the other, and it will shift. And so I can assure you it'll shift.
Yeah, and I'm going to have to squeeze in one more question and go right back to where we started from, which is Eraring. I mean, might we see just a mothballing or a 1 unit kept online or 2 units? I mean,
it's hard for me. Yeah, that's a sort of a nuance to the original. And there'll be a closure, and the question will be, will it be units by time versus all at once? I would expect, because you've got this ability to that there could be that you're staging stuff, but that will come down to how the market evolves, by the way. But that's a likely, I think that's a reasonable assumption, not a definitive one, but a reasonable assumption.
Would that be in the lead up to 2027 or after 2027?
Look, at the moment we've given notice on all in 2027, and that's the base case. It's premature to think about anything else at the moment, John.
Okay. Well, look, Frank Calabria, thank you very much for joining the Energy Insiders. We enjoy your frankness and yeah. So thank you very much, and look forward to hearing the next update. So thanks for.
Well, thank you. Look forward to chatting again soon, and appreciate all the work you do, Giles. So thanks very much.
And that was Frank Calabria from Origin Energy, and thanks very much for coming onto the podcast. David, I don't know what you took out of that. No clearer view of what's happening with Eraring. I mean, obviously, it'll probably be phased out unit by unit, as he said later in the piece after you had dropped off. But, just an interesting assessment, I think, just of where everything sort of stands at the moment.
Well, his focus is on electrification. Frank doesn't give much away, obviously. Like, to be quite honest, I got more
even to us.
I got more out of the Damien Nix interview than I did from Frank. In some ways, except that Delta Yanco is proceeding quite steadily, and Origin thinks it's the cheapest wind powered station, but I'm not sure that it is. It's really only just quite competitive with a number of others down there. And I suppose the other point about it was that they're not going to keep it on their balance sheet. And the point I would make is that a company like Origin, I did make it in the few minutes I was talking, could be one of the catalysts to actually become a big force in wind development and actually keep stuff on its balance sheet and get it funded by the superannuation industry. But that's not their traditional modus operandi. I'd also just quickly comment that the big bet that Origin has made is in the Octopus retail system and software, which is great. The market loves it, but the cash flow from it is actually pretty minimal at the moment, and it's got a lot of work to do to grow into that valuation. But it doesn't leave a lot of cash lying around to go building wind farms.
In fact, we didn't even talk about Octopus in the whole interview. That's probably my mistake. I was supposed to be holding the fort. Yanco Delta, yes, it's interesting. He does say that it is the best site. I'm just wondering whether he's sort of jawboning his own company down when they come down to negotiate an offtake agreement.
Giles, to have a CEO talking his own book. I'm glad I'm relaxing in the Philippines. Otherwise, I'd have had a good lie down. Now, listen,
shocked we are. Shocked.
Moving right along, I think as interesting as the interview was, the real news of the week was the passing of the EPCB legislation.
EPBC?
Yes. With amendments that the Greens supported. And I think in the end, that's quite positive for the environment. It's not perfect. There's no climate trigger in the legislation, and there should be. But having said that, the amendments the Greens requested, which is to get native foresting, hardwood foresting, is no longer exempt, effectively.
Yes.
And neither is land clearing, of which there's a lot in Queensland. That too also has to comply with the legislation. We've also got the fast tracking of the process. So all in all, I think it's a pretty positive step forward. And frankly, having Graham Samuelson, who was the author of the original review of the legislation and a very, very respected figure in corporate Australia, giving it the thumbs up and saying it's what he thought the legislation should have achieved. I have to say, well done to Murray Watt. Well done to Murray Watt for getting that passed, getting the deal done. it's, we should all take heart from it.
Yes, and well done to the Greens as well for their role in getting it over the line, even if it wasn't perfect. So hopefully that's the sign of a new era of consultation and collaboration. We saw the benefit of that a decade ago when the Labor Party government had to. It still has to a certain extent because it needs to get things through the Senate. And I think that's actually a positive step because not everyone was convinced that Anthony Albanese had it in him to do that sort of thing. But maybe he was feeling in a cheerful mood because he was about to get married on the weekend. So anyway, that's a good thing. Just one thing I'm just going to add to the Origin stuff, which is about the timing of Eraring and the need for system security and system services. You wouldn't have seen it, David, because you've been on the beach surfing in the Philippines, but there's a report coming out from AEMO, has come out from AEMO, just looking at the system services need in all states in Australia, and it just points out the issues in New South Wales and the need for, basically for the states to scramble to get those SynCons and those contracts for grid-forming inverters out there to make sure that those services are there and plentiful by the time Eraring closes in 27, if it does, Yallourn in 28 and Gladstone in 29. David, just moving along because we've already kept a lot of time. COP31 is not going to be in Australia. It's going to be in Turkey. Chris Bowen's going to have an important role as head of negotiations. He's kind of been thrown the hospital pass and not getting to host it. But it'll be interesting to see how that goes. Some people think it's a really big missed opportunity for Australia not to have the opportunity to host this sort of massive, green jamboree, as it were. I mean, it's a fantastic, or a huge get together. Between 50 and 100,000 people, or even more on some occasions. But I'm not too sure what you think about it. I'm not really too sure what I think about it, actually.
Well, I think these things, you can either see them as trade fairs or you can see them as things where you want something serious to be achieved. So I suppose it's what the goal is. In the end, I'd have liked to have seen it here. I think it would have been as good as having the Olympics or something. But I think, the caravan has moved on. As I said, I would just like to focus on I said this last week, I'll say it again, us getting to somewhere between 60 and 80% renewables by 2030. We need to get on with all these new wind farms. It'd be nice if they could be all synchronised and not all get approved and start a bit notice to proceed in 2026. And then we run into, backlogs and jams at the ports and stuff while we're building them, and not enough engineers or grid study people all having to work on something all at once. But that's beyond Australia. That's the private enterprise market. It'll all come right on the day.
Well, let's hope so. And look, just on that, it was interesting seeing some of the contracts that were written actually during the week. Snowy was pretty busy with a PPA for Carmody Hill. So that's kind of competing with Palmer Wind Farm to be the first wind farm to reach FID. In 2025, Palmer got its grid connection approval from Electronet. So both those wind farms seem poised within a week or two to announce FID, which will be
as predicted in my note, Charles. I wrote months ago when I went through.
You did. I remember. No. Well done. Yeah. And look, it's interesting that Snowy Hydro was the writer of the contract or the off-taker of the contract for Carmody Hill, and has also jumped in to take part of the battery off-take for Golden Plains Battery, which is being built next to the Golden Plains Wind Farm by Tag Energy, and another of those big assets which is getting built on a merchant basis, but rapidly filling up its books with contracts as they go. So fortune does favour the brave on occasions.
So my own view is that there's talk in the press that Snowy may be used as the vehicle to provide the energy contract to Tomago post 2028. And it's fine for them to do that and to guarantee a price to Tomago. But Tomago should be given a strong incentive to cut its production quite regularly down to about 65 or 70% of what its full output can be, because that's economic a lot of the time now. and doesn't damage the pots. And secondly, I don't believe there should be dedicated assets supplying Tomago. I believe the cheapest price is just to buy from the market on a spot basis, on an unhedged basis. That provides the lowest overall price that will be achievable. Obviously, a discount's got to be given, but how much of a discount? Well, that's a negotiating matter.
Okay, David, I think we're going to have to wrap up there because I think we're starting to run into a few issues. So thank you very much for joining us from the Philippines. Thanks also to Frank Calabria from Origin Energy for tuning in. And thanks to all the listeners out there. We'll be back with another episode of the Energy Insiders podcast later this week, actually, because this one, the timing is a bit different from normal. Anyway, thank you for listening. Bye for now.